everybody, Happy New Year. So 2022 was a wild ride in the San Diego real estate market as inflation, soaring interest rates, and elevated sales price combined to cause a slowdown nationwide.
Yes.
And everybody wants to know, where are things headed this year? Well, today we're going to be reviewing what happened last year and talking about some possible scenarios for how 2023 could play out. So let's get started.
Yes, 2022 was a wild ride to be sure. And everybody wants to know what's going to happen in 2023. And I would love to be able to tell you exactly what's going to happen in 2023. But the bottom line is nobody really knows for sure. We can make educated predictions based on history and based on what we know about where the market is right now.
Well, let's take a look back at 2022, and let's start with inventory of homes, because that was an interesting part of last year's story.
Yeah, it's been an interesting part of the real estate story for several years now. However, 2022 really highlighted what happens with inventory in a slow market. So yeah, the inventory of homes for sale, we're looking at 3 years now. Here is detached homes and attached homes. So it's basically the same shape graph. So I'll just kind of...
I was going to say, and just for reference, if you're looking at this little chart down in the corner, this starts at 2013, and each of these lines is a quarter. So if you look at the last 4 lines, if you could put the cursor back to the last 4 lines, that's the last 4 quarters, which was last year.
3, 4. So this is, okay, yes.
Yeah.
So this is where 2022 started. Inventory very low, and then going, we thought inventory was going crazy, but when you look back here to 2019, 2018, it was much, much higher. In fact, I mean, you're looking at the 10,000 unit line here. So we had several years where inventory was definitely topping 10,000 units, and then just really plunged in 2019, continued to plunge in 2019, and then again in 2020, steadily down. And we're seeing, this appears to be more of the trend now than this. And since we're lacking any real source of serious influx of inventory, i.e. lots of foreclosures or something like that, it's likely to kind of continue in this pattern unless something changes.
And people are staying put right now because, anyone who bought in the last few years has a great interest rate, and they're not going to leave unless they have a good reason to.
Also, since the inventory of homes for sale is very low, there's nothing for those people to buy. And this isn't just a California or San Diego phenomenon. This seems to be true across the country, as far as I can tell. Inventory of homes for sale is very low, and this is due to, like you said, a lot of different factors. Work from home, people having great rates, there being no replacement homes to look for. It's sort of a self-perpetuating cycle.
People are still moving, though.
Yeah.
For whatever reasons, people still need to move for a job change. They're downsizing. Lots of divorce. Lots of reasons
are popular,
why.
Yes.
Lots of reasons why people still need to move,
yes,
even though inventory is down.
For sure. So yeah, that was actually as good a conversation as I was planning to have about this chart up here.
Okay.
Bottom line is the 12-month average is up 21%, sort of reflected here. 12-month average is really being inflated by this little ballooning here in the middle of 2022. So yeah, let's go ahead and move on to closed sales. And that's where the rubber meets the road.
Oh my.
Yes, where did we wind up with closed sales? Now, of course, the number of closed sales is also a function of the availability of sales to close. So
you can't sell more houses than you've got on the market.
No. However, you do see in December of 2020, there were roughly the same number of homes for sale that there were in December of 22. You can see a very, very similar number for sale. However, in December of 2020, we closed 2,200 units of detached homes, and then this about almost half, down 46.2%. in terms of the number of closed sales.
If you go over to this graph, the Association of Realtors is going to have to put a new lower bar down there. We're about to dip below their 500 line on
We're going to need to
attached properties.
Yep, going to need to change the scale of this graph if this gets much lower. So yeah, the number of closed sales is way off. And then there was a surge of pending sales in December this past year, just last month. So it'll be interesting to see what we see January to January.
We certainly had a Santa rally in our business, so we'll see how that pans out with actual closings in January.
Well, interest rates came down a little bit in December, and that caused a surge of pending sales. Interest rates, inventory, both down. So buyers were out in force last month. But of course, November was very slow for pending sales. So that is reflected here in this number that is down 46% from the year before. So not great news in terms of closed sales year over year. However, we're hoping for a bit of a shot in the arm from the December Santa rally.
It's a new year.
A new year, yes indeed. So then looking at median sales price, again, if you look at this market doesn't really look so bad. You know, people keep talking about how bad it is and how slow it is, and it is slower.
Sellers are holding out for their price right now.
Yes.
Things have come down from the peak, but sellers are holding the line right now.
Yeah, sellers are definitely hanging on to their price. And, you know, for every 15 buyers that looks at your home, there's a couple that are willing to get close to your price. I am seeing in a lot of zip codes where last year the sale price to list price ratio was over 100%, meaning everything was going over asking price. This year, this past month, we're seeing a lot of sale prices that are in the 92 to 95% of list price. So we're not seeing that crazy overbidding going on, but people are still buying and they're getting pretty close to the listed price.
Well, I did this very official analysis of what has happened to the market since the peak. It's you can see it here. This is actually written on a piece of note paper from almost 20 years ago. So that's us, fresh off the turnip truck.
We haven't changed it yet.
It's my 2003 hairdo.
Yeah.
Anyway, so this looks like some scratches on a piece of paper, and it is. But I'm comparing median prices now to what they were at the peak. And I'm calling the peak April of 2022.
Correct.
And the reason for that is because that is when the median price of a single-family detached home hit $1 million even. That's the most it's ever been. Depending on what metrics you want to look at, you could also call May the peak, but April, May, around in there, I think we can all agree that was the peak.
Yeah.
So I'm going to go with April. So all properties, attached and detached, the median price in April of 2022 was $875,000. Last month it was $765,000. So that's a 12.57% drop from the peak.
Right.
So let's look at attached properties. Same parameters. It dropped 11.43%.
Okay.
Detached properties, 13.01%. So, 11, 12, 13%, that's how much we're off from the peak of the market.
And that makes sense. So basically where the market ballooned up to in April, May, it's down roughly 12.5% overall from that point. But that was after a huge rally. So that's why median price remains strong. And because inventory is so low, sellers are able to a certain extent hold out. Now it's just not like it was. The hyper sellers market, we kept saying earlier in 2022, we were saying it's a hyper sellers market. It's unsustainable. Prices cannot continue to grow this quickly. And they can't and they didn't. So it came down. However, from 21 to 22, median price still up 2.3%. And when you're talking about a median price in the 900s, that's a lot of money, 2.3%. And with attached properties, actually down just a smidge, so down 0.08%. So if you're in a condo, your value, for whatever reason, didn't grow between 21 and 22. So it looks like your attached there is down 11.5% from the peak. So that's median price. It really is holding its own.
Well, we had a drop and it seems to be kind of consolidating over the last couple of months.
Yeah.
So we'll see if that continues. And my prediction is that it will.
I believe so. I believe that this sort of, as you look at this graph here, there was a pretty significant drop in median price earlier in the middle of 2022. But as inventory came back down, median price seems to be consolidating along this line here, and I expect it to kind of plane out in a straight line unless interest rates, mortgage rates jump again.
Well, let's have a look at the mortgage rate slide, and then we'll get to
then we'll talk
our
about
possible predictions, our
Got it.
possible scenarios for what might happen this year.
Got it. So this is the U.S. weekly averages for mortgage rates according to Freddie Mac for this week, or last week, I mean, and that was 6.48%. I believe the week before that, or somewhere before that, we had gotten down to 6.25 or 6.35.
If you hover over here, it'll tell you.
Oh yeah, the lowest point, 6.27. Sorry, 30-year fixed in the week of right before Christmas, it was 6.27. So all things considered, that's not terrible, and it provides when you're at 6.27, you can come in as a buyer, write an offer, seller can help cooperate, pay some closing costs, buy the rate down to a more reasonable level with a 2-1, 3-1 buy down, total rate buy down, whatever you want to do. So as long as rates are kind of hovering in this range or lower, I think we're cool. If they start to shoot up again, much beyond where they are now, it's going to start to get ugly again.
Well, shall we move on to our outlook for 2023?
Outlook for 23.
Let's start making some, not quite a prediction, but our opinion on possible scenarios and how they might play out.
Okay.
And also some other expert opinions.
There you go.
So I think we can all agree that rising mortgage rates drove the market last year. And most experts agree that this year rates will be less volatile. Let's see, the director of forecasting at the National Association of Realtors, Nadia Evangelou, expects rates to settle below 6% in the coming months. Right now, the federal funds rate is in the 4.25 to 4.5% range, and the minutes from the most recent Federal Open Market Committee that sets the federal funds rate, they indicate they expect higher rates to remain in place until more progress is made. So that sounds like a while. Nobody on the FOMC expects rate cuts this year. So the federal funds rate is not coming down. Traders are expecting the central bank to approve a 1/4 point increase at the next meeting in February. And I would be surprised if that's not what happened.
Right.
So we might have a few more rate hikes. They're not coming down this year in all likelihood. So we're going to have to deal with that. And, what do you think is going to happen with rates?
Well, I think much like the National Association of Realtors predicts, most of my lender friends are telling me they expect rates to ultimately settle under 6 this year, whether it's in the second or third or fourth quarter, and of course less volatility, where we shouldn't see any dramatic spike like we did in the middle of 2022.
So they may settle out a bit more, but they're certainly not likely to drop, below well into the 5s, because if the federal funds rate is around 5.5, well, the bank isn't going to pay you to borrow their money. Yeah,
that's right. With the federal funds rate near 5 or over 5, mortgage rates are definitely going to be hovering in the high 5s to 6s at the lowest.
All right, well, let's talk about sales volume and inventory. So right now, housing is less affordable for buyers. A lot of people are waiting to see, which is understandable. Sellers are staying put because they've got a great rate locked in. So let's see, the National Association of Realtors chief economist, Lawrence Yoon, projects a dip of 7% in 2023 with a rebound of 10% next year. What do you think about volume and inventory?
Well, I think inventory is likely to climb a bit, probably not much. I think the rush of sellers to the market happened when rates jumped. That was a bit of a panic on sellers' parts, and a slowdown in sales combining to push inventory up. I believe we're going to see it hovering, in right now we're just under right around 3,000 units countywide. And I believe, it's going to hover in between 3 and 35 for at least the next few weeks or months.
Okay, so we kind of already had the shakeout. You're expecting things to remain relatively stable, or?
I expect it to, yes.
Okay.
Given no other weird bombshells.
Other weird stuff.
Yeah.
And these days, who knows what might happen? We
Right.
certainly have seen a lot of weird stuff happen over the past couple of years, and hopefully we can not have any more weird stuff for a while.
You ever seen the movie Independence Day? Could happen. Could happen.
All right, well, hopefully not.
Yeah.
Hopefully things can, be cool for a while.
Right.
Okay, so let's talk about prices. So after dropping last year, right now prices are holding relatively steady because of low inventory.
Right.
So economists seem split on whether prices are going to fall or remain stable. And this is kind of regional too. Like how we talked about, we already pretty much had a drop. So whether there's any more drop left in the San Diego market remains to be seen.
Yes.
Fannie Mae is projecting a 1.5% decrease in the year-over-year home price index. Freddie Mac is predicting a decline of 0.2% in home prices this year. So Fannie and Freddie, mostly in agreement, not a lot of movement overall
Right.
in pricing.
And that's kind of what we're saying as well. I really believe things are going to kind of hover along, waffle along, whatever you want to call
Consolidation.
it. Consolidation, right.
Well, what are you going to do if you're thinking of buying or selling right now? What do you recommend that people do?
I recommend people get it done. Because if you've got a move to make, I would say make it, because we're predicting things are going to remain relatively stable or a little up and down. However, you just never know, and things are pretty decent right now. So if you have a move to make, I would say now is the time to do it. Rates are decent. Sellers are in a mood to make deals with regard to credits and rate buy downs. So you can get, if you're looking relative to where the market peaked in April of 2022, you can get great deals right now. You can have a little bit of seller help to get your rate down so your payment can be, similar to what it would have been, at old interest rates.
And the best bargains are often found in a slower market like this.
Yes, for sure. But don't expect to go shopping and get 20% off the price. It's more, on average, it's roughly 5 to 7% below list price that things are closing. However, it's kind of almost week to week or month to month right now. We have the one home we put in escrow last week. We were trying to sell that home in October and November, and it didn't go so well. Put it on at the same price first week of the year, and bam, it sold right away. So that's just a function of lower rates and lower inventory. So if inventory ticks up a little bit in 2 weeks and rates go up a little bit too, that same house might not sell for the same price. So it's just a little bit up and down. And when you're talking about, what do they say, 0.2%, 1.5%, those are small numbers, but as a percentage of $900,000, $1 million, that's a lot of money. So I would say if you got something to do, get it done, give us a call.
All right, well, we'll continue to keep an eye on things, and we'll be back next month with another update. Thank you for joining us, and we'll talk to you soon.
Happy New Year, everyone.